Hello and welcome. You're watching News 9. Stories from the world of policy, business and economy up next. Focus on RBI. Strong forex gains propel RBI's financial year 23 income to 2.35 lakh crore. We will discuss the highlights of the central bank's annual report that was released yesterday. Also on the show, BYJU'S valuation slashed by 62% to $8.4 billion in March quarter. BYJU'S was earlier valued at $22 billion. De-valuation hits Indian startup ecosystem. And Tesla's foray in India is all set to get a boost as government asks electric major to share a roadmap for vendor base in the upcoming months. Nvidia becomes the first chip maker in the world to be valued at over $1 trillion on the back of AI boom, joining the $1 trillion club. All that and more on this bulletin. With me in the studio, as usual, is my colleague Karthik Malhotra. Also joining us is senior business editor Rakesh Khar. Karthik, let's straight up jump to the RBI's annual report that came out yesterday. It suggests, to begin with, on the economic front, that India is going to grow at a sustained pace of 6.5% in the year to come.
In fact, 6.5 was the previous estimate, and that got revised to 7%, Shweta. So, that is actually contrary to what even the global sort of, Brentwoods, etc. have placed India's growth at. And if you remember, earlier this year, we were talking about a 6.2, 6.3, 6.4% range, and that got revised upwards to 6.5. But the latest that has come from the RBI governor is that India could very well reach a 7% rate of growth. And this, again, when the inflationary pressures start to ease, and we are looking at inflation to come down to about 5.2% this year, as opposed to CPI inflation hovering around 6.7% last year.
Right.
Now, there could be some spoilers and poopers in this party, and one of those could be the El Nino event. So, in case that happens, there's prediction of a normal monsoon. And again, we had reports earlier that there could be an El Nino, there may not be an El Nino, there could be a 94% or sub 94% below normal monsoon or a 96% normal monsoon. But I think more or less there has been consensus now that monsoon is going to be likely, but an El Nino event may trigger a set of damage in crops, and then the whole crop cycle could lead to higher inflation. But in the absence of that, 5.2% is the inflation that is pegged by the RBI for FY24.
Annual report. I'm looking at a number of 6.5%. Do you think that's a misreporting, or because from what I'm reading at the moment is that the report projected an economic growth rate of 6.5% for the financial year 24. So do you think this is misreporting then?
No, I'm not sure if it is misreporting or not, but the numbers that I had, it was 6.5% for FY23 close, going up to 7% for FY24.
Okay, so 6.5% for 23, the year that ended, and up to 7% for the upcoming financial year. All right, let me rope in Rakesh at this point in time. Rakesh, it suggests here an RBI saying that its attempt to tinker with inflation has resulted in sort of, positive outlook, growth of approximately 7%, inflation to remain under control at about 5.2%, and that is if the macroeconomic conditions don't change for adverse. We have a good monsoon, and there is no El Nino as is being projected by meteorological department, and then there is on and off report, of course, on whether there's going to be El Nino or not. But financial growth there looking good for India in the year to come as per RBI.
Absolutely. Morning, Shweta. Morning, Karthik. It's heartening to see RBI itself being in pink of health. It's given a dividend to the government. What government does with that essentially would spend on subsidies which are overflowing. But that's another day, another story. As regards the projections, I think what the RBI governor said at the CII annual function, I think last week, maybe earlier this week, I don't remember the day, but it was pretty recent, where he said that fiscal 23, we would do better than 6.5%, actually close at 7%, which is better than the IMF projection. And also for the fiscal 24, he has expressed hope, because obviously there are, the whole year is there right in front of us, and there are obviously challenges known and unknown. That also probably India would do better than the IMF projection, and the figure for that is 6.5%. So sustaining an economy at 7%, if we actually clock 7%, one week actually set up the entire numbers for the fiscal year which has just ended, and also a 6.5%, possibly even better than that for fiscal 24, This is great news, especially for this particular government. We're going into elections. If you have a healthy balance sheet, if fiscal deficit, if GDP numbers are a key parameter for a government's P&L, in that sense, government and good news for the country and good news for the establishment.
All right, good news for the country and the establishment at this point in time. Another interesting facet of the report was with respect to the balance sheet of RBI, and that's also looking very healthy, closed at $63.4 trillion in financial year 23, Karthik.
Yeah, so the balance sheet expanding is great. It has a total aggregate of your assets and liabilities. But the growth that you see, which is 47% in the income of RBI, and that has gone up 47% to about $2.35 trillion.
Okay.
While it's been reported as, as an increase, which it is technically, but this increase comes on the back of RBI having sold forex. And this is a function of depreciation in the rupee. The dollar pegged higher in rupee valuation, and when you sell $1 trillion worth of dollars, that becomes so $1 trillion of this $2.35 trillion is actually the sale of forex, which happened last year, again in a bid to tame inflation. And broadly, of course, the liquidity suck out that happened on account of the rate cycle that we saw, the increased higher rate cycle. So again, remember, about 250 basis points has been the overall increase in rates in the last 1 year. And during that, of course, the liquidity that sucks out of the system goes into banks, gets parked back at RBI, sort of inflates the balance sheet.
Right.
But the increase in income is on the back of high amount of forex, especially dollar sale.
Okay. A record dollar sale for that matter, to the tune of 1 lakh.
A little over $1 trillion.
A little over $1 trillion. Rakesh, just the other day, and I'm reminded of the conversation that we were having, with respect to RBI reserves, and you gave a very interesting example of India and China and the difference in RBI reserves. If you could, once again throw some light on where RBI reserves stand at the moment, and what is propelling RBI to, get more and more reserves, get more and more money parked at central bank.
Well, you're right. Actually, there are two ways of looking at it. One is that RBI's balance sheet is looking good, but Karthik is right. It's essentially on the back of forex deals where, there can be a debate. Is it right for RBI to actually intervene every time and try and manage and hedge the rupee? If RBI doesn't do it, who does it? Market forces. So that's a bigger debate, but if you remove that particular chunk from the balance sheet, that growth doesn't look that bright, all that bright. So in that sense, it's essentially on dealing in the forex and, selling forex to sort of say stabilize rupee. But the other more stable and durable piece to my mind in the P&L is a contingency fund. There's a stipulated contingency fund which also has seen a growth. I don't remember the exact numbers, not very good numbers ever. But there is a growth in that, and contingency fund is a fund of RBI, like any central bank, is a great relief for the common man and also for any citizen in this country. That in case of any exigency where there are challenges which need to be mitigated, that contingency fund gets into trigger. As regards the larger conversation of what is it that RBI has, as its key asset. So it's essentially forex reserves, where they also, include the gold reserve. That's also a denominator where it's included. We discussed last week that RBI is buying gold in a big way. So we have really a healthy forex cover, if I can use that word. But when you put it in comparison with, say, China, I think it's 1.6 trillion if China has, and US is even bigger forex cover. India is about 600 or 700 billion dollars. So in that sense, long way to go when it comes to comparison with China. What was contextual that time was, we've been discussing repeatedly with Karthik, playing rightly, the credit card charge or the travel charge when you travel abroad, the levy that has been put about at 20% beyond the 7 lakh limit. I was trying to point out, which is important to consider here in this debate, Karthik and Shweta, is that in China, for instance, the limit that a citizen of China can invest abroad is, $50,000 versus India's $2.5 lakh thousand. So with the kind of reserves in terms of forex that China has, which is much higher than India's, and the kind of limit that India has, which is 5 times that of China, the tendency and the need actually to sort of say supervise your forex management as a central bank is very, very critical. we're not pardoning the, the regulator and the government for putting that levy, which I think is avoidable because we don't know how much forex it will save or how much, and it will also bring about a lot of complications, which Karthik you have discussed at length. But it's important to put that, perspective that India and any country or any central bank wants to keep a hawkish eye on the forex cover that it has, because which is the biggest defense against any possible challenge. We know 1991 what happened. That story is part of the textbooks now. Everyone who studies economics or politics knows that we really had to mortgage our gold to secure our basic forex interests.
Rakesh, if I can just ask you one question, the annual statement of the RBI and Shaktikanta Das himself on record said that the government capex spending has been able to sustain GDP growth last year, but he's also hopeful that that capex spending is going to spur private investments as well. But given the hawkish stance that the RBI has taken and continues to hint on withdrawal of accommodation, so in the absence of rate cuts, now that inflation seems to be tamed at least to a point that it is within the RBI's threshold, in the absence of rate cuts, do you see private credit offtake happening at all in this year?
I think government has drawn a blank, so has the RBI nudge. Private sector capex, there has been a capex pickup. I don't remember the number right now, but they're not parking it in actual investment. So that's where there's a discordant note. And RBI governor is right in estimating, and the finance minister has repeatedly been saying that we have, at our part, invested so much. We are heavily invested in public expenditure. But there are limits to public expenditure because government has to manage the social welfare scheme, and it also has at the front end manage the public expenditure, which is shaping up in highways, roads, infrastructure in a big way. I can say that repeated pitches by the finance minister, I think some subtle hints by the prime minister, and the entire ecosystem in the establishment has failed to. I would use the word enthuse the private sector. I think they're still being very cagey, and it's time for all of us as media commentators, rightly or wrongly, I don't know what's your view, for private sector to really nudge them beyond a decent push and tell them that, boss, you are equal partners in this growth story. And India's entire GDP, 75% is in the private GDP. So in that sense, if they don't fire, the GDP doesn't fire. And if GDP doesn't fire, the India growth story obviously will not be able to sustain the 7% growth that we're looking at.
Yeah, so my view really here is that, in the absence of, let's say, cheap credit being available in the economy, which again is thanks to inflation, which you can't blame India directly for. I mean, there was a COVID situation, there was a Russia-Ukraine, there is a Russia-Ukraine war, supply chains are constrained. But all of that notwithstanding, FDI into India is slowing down. We've seen startup capital into India is likely to get taxed using the angel tax. So, the options available for the private sector to raise capital to invest back in, into infrastructure and big asset building is likely to be small as far as I see it, sir.
See, Karthik, this rate hike, has happened in the last few quarters. For that, we had a very healthy in the COVID era. And post that, the interest rates were very benign. They were very handsome and very pro-industry in terms of, getting them to pick up credit and then use it judiciously. There is a contrarian point, but I think it's important for us to not get swayed. At the Davos meeting, the TCS, Tata Sons chairman, Mr. Chandrasekhar, he said that, we keep being pushed around and asked that why not matching the government level of excitement when it comes to expenditure. He said it's much difficult in private sector because there's a process. Government, there's a political will, and this government has shown political will, political appetite, and political risk-taking capability. A project, a DPR, a detailed project report, goes through a series of clearances, and finally the board has to look at the value of that, and it's not that easy. I mean, here's an interesting example that he said that while it's much easier for the government to take a quick decision and implement a huge sum of expenditure to be spent for whatever good, whether it's social welfare scheme or it is front-ending infrastructure growth. But for private sector, the process is longer. You have to do a real mathematical P&L on the outcomes that would come about. And all of us know that the private sector in particular is not yet fully impressed by, the stability in the overall environment, especially the linkage that private sector at large, especially the big companies, have with the global environment. So in that sense, you have to give them a little bit of a quota. But I mean, there is a decent time that has already come about, and I think it's time for them to get into that activity. Otherwise, it could also be an opportunity of them missing the bus and India missing the bus.
Sounds a little counterintuitive to me, sir. You say that, not you, you're attributing it to N. Chandra, who says that the government process is agile and the corporate process is bureaucratic. Seems a little counterintuitive, but yeah, we'll take his word for it.
No, I saw that. I can share the link with you. It was at the Davos session.
No, I'm not doubting your your statement. I'm saying it coming from N. Chandra. It just I'm sure there is merit in that, and it ratifies that agilities in the government sector and bureaucracy in the private sector.
I mean,
that concept sounds a little
sort of a role reversal there, sir.
I was myself surprised. But again, within corporates, there is a Tata culture. There is a
right.
Ambani culture, there's an Adani culture,
Right.
where we believe that Adani put the fast move forward. And, Ambani is also expanding at such feverish pace. They're getting into retail, they're buying and they're eyeing anything and buying that. So in that sense, Tata's has also a historical context to the way they conduct.
All right.
And when they really did a good job of it, being really fast track, nano, that didn't fire.
All right. Okay. We're going to move to another interesting take that is coming out of the RBI report, and that is with respect to bank frauds and fake currency in circulation.
That's the other counterintuition. Just when you thought bank frauds are rising, RBI states that they're actually falling.
I'm extremely doubtful of. I mean, I understand these numbers are arrived on the basis of reported bank frauds, Karthik, but we also know that not all bank frauds are reported.
But that would have been the case even in the previous year. Not
Right.
all bank frauds in FY22
And this is the
would have been
data,
reported. This
right.
is data. So, reported versus reported, assuming that the percentage of people who report is the same when you normalize it over a large data set. Then, if these numbers are to be believed, and I don't think we should have reason to not believe them, bank frauds have actually halved from about 60,000 crore levels to about 30,000 crore levels, which in itself is
Are
still
we
a very high
suggesting
number.
there are not many bank frauds, or are we saying that people who are reporting bank frauds, number there is declining?
No, I think it is the absolute value and volume both of bank frauds which has come down, because this trend of bank frauds, if you remember, started maybe in 2018, 2019, and that is when it picked up steam. But over time, I think the crackdowns that have happened, you understood the modus operandi, public is a little better educated, so maybe there is merit in looking at these numbers objectively, because number of people reporting bank frauds, if anything, would have been lower in 2022 and higher in 23.
Okay.
But the value of bank frauds has halved from 22 to 23, which means there is some merit in this argument, I feel.
Okay. Interesting argument, and not just with respect to bank fraud, also fake currency notes. There were approximately 91,000 pieces of fake 500 rupee notes detected in financial year 23, as opposed to 2,000 denomination that decreased by 28%. That's largely on account of the fact that
it was lower.
There
in
lower
circulation
number
in
of
any case,
lower
true.
number of 2,000
But
denomination
on bank frauds
notes
as well, Shweta, just to add another point, interestingly, it is the loans which are the biggest contributors to bank frauds. So,
Okay.
easy loans, cheap loans, right, or BNPL kind of schemes. So, these immediate loans that are promised to be made available instantly are the largest chunk of bank frauds.
Right.
And if you look at the data a little more, in granular detail, public sector banks have reported the highest value of frauds, value in terms of rupee value denomination, whereas private sector banks have reported the maximum number of instances of bank frauds.
Right.
So, I think the big ticket frauds are taking place on account of public sector banks, but the number of frauds, the smaller 100 rupee, 1,000 rupee, 5,000 rupee frauds are possibly happening in private sector banks.
Okay.
But the biggest chunk, lion's chunk, is these loans which are promised to be dispersed immediately,
Right.
and some fraud on account of that.
Okay, so Rakesh, it does look like government's attempt to curb these websites, easy loan, and such apps which were a lot in number have come down drastically now. It seems to have an impact on banking frauds, which have declined massively on the back of government's attempt to crack down on these easy loan apps.
But still, even within this reduced half, 30,000 crores, loans is the biggest.
Loans is
chunk.
still the
Yeah.
biggest.
Yeah, so I would imagine, Shweta, I haven't looked at the numbers. One needs to do a little fine print on this. What is important is that RBI, as a central bank, must redefine what's a bank fraud. In an era we are living in, this bank fraud becomes a very loose term. So one has to look at and incorporate all kinds of frauds, from the jantaras, which also use payment gateways, to so that ambit has to expand. And if the ambit is not fully expanded, that's why probably the concern that you raise at one level, it looks like the frauds are rising, but maybe RBI is not able to capture them as they're happening. And it's good news, the government has gone after, the banks have gone after the KYC norms. In that sense, they're looking at cleaning up the loan segment, which Karthik is right. That would probably forever be the biggest, so to say, component of these frauds. People just run away and, they take loans and they're not seen to be just where they're gone, because there is some amount of intervention, what we call phone banking, as Modi ji used to call it. But that's a permanent feature, you really can't do away with that intervention, which is external. There are other set of data which have come in the last few days, where actually UPI transaction frauds have increased. At one level, UPI is like, the beacon of hope, and it has actually become a trendsetter globally. But what is also happening is that even UPI is facing and observing those challenges. So the fraudsters are, one step ahead of, as we have noticed in cybercrime, and the linkages between the white-collar crimes and actual criminals at the tier 2, tier 3, tier 4 cities and rising up to the big cities is phenomenal. And I think, that excess is really something that is not necessarily in the remit of RBI to control. It is the law and order agencies which need to keep an eye on that.
Right, very interesting there. Would UPI frauds be construed as banking frauds? Because if that's the case, we've seen a massive jump in UPI frauds, Karthik.
I think technically yes, Shweta, because your UPI is linked to a bank account. So whether you look at being duped of, let's say, a credit card transaction or a cloning of an ATM or even a UPI, any of these transactions at the end of the day are linked to your bank.
Right.
So I feel these would be categorized as bank frauds.
All right. So we need to look at larger definition, of course, of what is a banking
fraud. But I think these BNPL schemes or easy loans, unless there is a bank-linked transaction, which again would happen actually. Sorry, yeah, I think that would still happen.
All involves a bank.
If you're making a payment to somebody, it does involve a bank again.
Banks are involved at all times. But interesting figures there. It appears that banking frauds have decreased both in value and in number, although despite every evidence to contrary that we keep hearing about of massive increase in frauds on a daily basis. But let's move on for now. BYJU'S valuation has also been slashed by as much as 62%, Karthik. Another important story that we've been tracking in the edtech space. BYJU'S, whether it inflated its valuation, did not inflate its valuation, but what we know for certain right now is that there's been a massive loss in valuation, not just for BYJU'S, but for the likes of Swiggy and others as well. So a funding winter there, sort of dampening startup ecosystems fervor and their happiness and more to say their perspective for what's to come in this year.
Right. So to borrow a phrase that our dear friend Rakesh uses very often, linkages, right? I think it's important to look at the linkages here. Number one, specifically on the case of BYJU'S valuation had halved from 22 billion to about $11 billion in December last year. As of 31st December 2022, the valuation had already almost halved. And now it has taken the second jolt on its valuation, where the valuation has now come down to about $8.4 billion. So it has actually lost close to 2/3 of its valuation, which is a sizable number. But then look at the linkages here, and not just BYJU'S. Let's try to extrapolate that across all the other companies also that you mentioned and beyond that. Now what happens really is that you know that there is a funding winter. It is difficult for you to continue raising easy money. Right. This is one side of the story, that easy money, access to easy money has sharply reduced because investors find safer havens in investing, let's say, in the US Treasury bonds or, in US government securities, etc. There is easier money because those were offering an assured yield. And in a market that doesn't default and is unlikely to default again with the debt ceiling cleared, right? As opposed to continuing to invest in a risky asset class, which is startups, not just Indian startups, the world over.
Right.
So this is point number one. So now anytime you want to raise capital, you are unable to raise it at the same value or at a higher value than what you had estimated to grow at. As a result, you start offloading equity at a lower value. Now, this devalues your firm per se. Now, on the other side of the curve, existing investors have seen that the roadmap that was laid out and the milestones that were installed have not been arrived at by these startups. Now, specifically in the case of BYJU'S, of course, it was a success story right in the midst of the pandemic when everybody was studying from home. And it became like a very obvious natural choice for a lot of people, a lot of students to enroll in BYJU'S programs. Now, as the pandemic eased, as schools opened up, obviously the whole business plan had to change, and that resulted in firing of employees and the whole mess that we saw in the edtech space, where BYJU'S, of course, leading from the front, but even the likes of Vedantu and all the others that had flourished, then all of them taking a beating. But now let's look at the other numbers. Let's look at, let's say, the likes of Swiggy, Ola, PharmEasy, Meesho. These are the others that have really been cut down in valuation, and they are down from 62% going down all the way to about 10% in valuation. This is simply, and in the case of Swiggy, it's counterintuitive, because Swiggy's food delivery business has turned profitable, and its quick commerce is likely to turn profitable in the next couple of weeks, as per the company's own admission about 3 weeks, 4 weeks ago. So, the point being that it is difficult to raise money with the same amount of ease and at the same high valuations that you were able to raise in 2021. That is now history. So, all startups are beginning to realize that they were overvalued and they are possibly reaching their fair valuation at this point.
Right. Okay, Rakesh, for a lay person who's watching us out there, what do these revised valuation mean? Is this good news? Is this bad news? How are we to read into these numbers?
I think it's good news for the overall ecosystem in this country. It's bad news for these companies. Because, there's a certain sense of realism which is dawning on, the truth about these companies. I'm not blaming them for the way they raised their money and the valuations they got. So fundamentally, anyone who's studying economics or politics and the linkages, as Karthik mentioned, is that these valuations were like a bubble. And they were not based on sound business paradigms. And what has happened with most of the startups in this country, I'll come to specifics for Swiggy and BYJU'S, is that a great idea on paper, a great investor on paper, he puts his neck out, and then there is a trajectory. We've been discussing this, that the investor feels that I have the numbers in terms of the volume game versus actual profitability in the P&L. That disconnect has sort of stymied India's startup ecosystem, and also this over enthusiasm to celebrate the unicorn status, again linked to valuation. So the fragility of valuation as a key matrix that comes up front. So in that sense, I'm happy that we need many more entrepreneurs like the Swiggies and the BYJU'S, but they have to be founded on the fairness and the robustness of that idea, and most importantly on the robustness of the business model. So a lot of Me Tooism in edutech sector, Me Tooism happening in a lot of other startup ecosystem. Specifically BYJU'S, it did suffer on account of a major uprise when it came to the COVID, because it had a model which really worked well, and COVID, that model collapsed. But it's to be there are.
All right. It seems Rakesh is trying to find a good network to come back to. But I think from what I understand right now, and that the story around valuation and the way Rakesh broke it down is that even though it's good news for not so much for raising capital, it's good news. At least there's some realism that is kicking in. That unless you book some profit, these high valuation, these are just numbers. They don't make any sense.
I'm not sure if I agree 100%. See, it sounds logical. When you think about it, it sounds logical that, yeah, companies will make profits, their values will go up. But that happens mostly in the case of listed companies, where these numbers are really taken into account. In the case of startups and unlisted companies, it is actually what we seem to realize with, limited experience that all of us have, because startups is a new phenomenon, just about 20 years old per se. So what we've come to realize is that profitability has little to do with valuation. Scale has a lot more to do with valuation.
Okay.
So deeper penetration, more number of customers, and greater sort of, acceptance of an everyday transaction with a customer, that sort of adds more to valuation than profitability, because we've seen in the case of Swiggy, profitability is on the books, valuation has gone down. So I see this inverse relationship, though I don't think over multiple startups, over multiple years of data points, you will see this relationship to be inverse. But an immediate correction in valuation, if anything, should have been upwards instead of downwards had it been linked directly to profitability. But what I see here is primarily a case of investors now saying that, okay, we've pumped in enough money, we have taken whatever returns that would have accrued to us by way of the startup we invested in, also getting another investor who has raised our value of investment because he invested at a higher valuation. So investors across the world have realized that, okay, we could milk it this much, we have milked it for now, let's take a step back. There is no hurry to continue investments. And just the other day, we did the other story of how foreign direct investments into startups has been dwindling, and how, the likes of Sequoia or Tiger Global or SoftBank have really cut down on their investments in the Indian startups right now. My feeling is they want to hedge it at the moment.
Okay.
There is likely to be an inflation. Global markets are not looking great. I mean, we see a flattish opening closing every day, but the scare, fear of recession, prolonged war, supply chains, all of that is going to continue for some time.
Right.
So they just want to hedge it. They don't want to go overweight on Indian startups. And anytime a startup wants to raise some money, that would be raised on account of a slightly undervalued valuation, as opposed to trying to milk the opportunity with a higher valuation.
All right.
So bad news for startup founders, definitely, no doubt. Good news for whom, I mean, it makes some sense, some logical sense in our minds and in the minds of public that, hey, how can a loss-making company like BYJU'S be valued at $22 billion? But hey, how can it still be valued at $8.4 billion? That is also a fairly high valuation.
Right. There's some sense of realism there kicking in with respect to Indian startups. We will track that story. But shifting focus to Tesla now. Tesla has been trying to make an inroad into India, and we're now given to understand that it is in talks with the government. They have met government representatives. This was as of last 3 weeks ago. And the government suggesting that if you are to resist and have a fair play game, which is what likes of Tata and Mahindra will have an objection to, and if you are to resist backlash from existing automobile giants in India, you will have to start developing a vendor base in India.
That's right. So make in India, or manufacture in India, or assemble in India, or procure from India. All these are very important tenets for any international brand to operate in India. We've seen even IKEA. Right, IKEA invested 10,000 crores or something, but 35% of its procurement had to happen from India, and over time that number has to only increase. And I don't remember exactly, but I think over a 5-year, 7-year period, it has to breach the 70% import or sort of procurement number. We've seen that even with, let's say, a much smaller brand like Miniso. So Miniso, when it came to India, it had very few products that were made in India or where the procurement happened from Indian vendors. It was mostly China, but then of course China backlash, which we talk about practically in every story. So let's not go there. But over time, you walk into a Miniso store today, you will see most of the items are made in India. So you see over a 3-year, 5-year period, companies start increasing their vendor base, but you've got to start with creating that vendor base. And I think the message is very clear for Tesla that come to India, figure out your procurement vendors, brief them, get your POC in place, and start getting your parts from these Indian vendors and start selling in India. There's no problem with that.
And we'll help you. We'll help you by the way of a PLI scheme.
Exactly.
We'll make it easier for you.
The revised PLI scheme, I think, it may be tweaked because there are two things to it. There is the revised PLI 3.0 which will come. And then there is going to be the entire electric vehicle policy, because Tesla has a huge electric fleet as well. So both of these may get tinkered, as the government has stated, on the basis of the blueprint that Tesla submits to the government of India, on the basis of the research and the mapping of the Indian market, the supply side of the Indian market that Tesla does. But one thing we know for sure, and glad that the government has stood by it, is that there is going to be no reduction in import duties, whatever you want to, put out on Twitter or wherever else. There is no reduction on import duties.
Okay, Rakesh is back with us. Rakesh, from what appears to be is that both parties are now sitting at the table discussing how to work it out, as opposed to reduce and tinker with duties, make it easier for us to enter into India. Government, of course, saying that there has to be a level playing field. We cannot be seen as favorable to you. We will make it easy for you by the way of PLI scheme, an electric vehicle policy, how to incentivize you because your large portfolio is that of electric vehicles. But this is going to be an attempt made to, to chart out a roadmap as opposed to give you what you want.
On a platter.
On a platter.
So interesting, from a difficult market for Tesla and Elon Musk, India is an exciting place to, explore. So that explains the paradigm shift in the last couple of months. I'm happy that Government of India stuck to its roots and said that, nothing to do with discounts on the tariff. But otherwise, you're most welcome. And we have templates here, which are in existence. Yes, you have a EV portfolio which we want to transition completely in the next few years. So you're welcome, but the terms of engagement have to be as per the rules of the land. And rules of the land, as Karthik rightly mentioned, there could be a PLI tweak, if we can call it 1.1 for EV category. But there's a huge pipeline, Karthik, for PLI 3. And as of now, the budgets that were marked for PLI have already been overshot. So in that sense, there isn't a great window to really, create a major upset or create a major exciting window for Tesla. But yes, come explore India and create relationships. And so you just can't come and start selling here. The consumption story in India is phenomenal, and everybody wants to tap into that. But now is the time, and rightly so, for the government to exercise that consumption story as a lever and tell people that if you want to set up base, as I said, in China, in the auto sector in the 90s, when India opened up, they insisted on having these very profound joint ventures, majority owned by Chinese. We took the other route, and here is a time for correction. So in that sense, Tesla's own tone has changed dramatically, and we shouldn't be too excited or holding a red carpet for anyone, whether it's Tesla or someone else, who doesn't want to conduct business the way it should be conducted with a sovereign nation. So it was very unfortunate that Tesla owner Elon Musk tweeted using his own conscience to say that it is a difficult market. He has realized the folly, and I'm happy that he's on a negotiating table, and he deserves a deal because it's a big company, it's a tested global corporation in that sense. Yeah, you're playing that tweet again. Yeah, so in that sense, I think he's learned his lessons, and I'm happy that Government of India did that. I mean, we must celebrate also the very, very competitive federal structure in this country where each state is vying. We've seen what's happened with Foxconn. Both Karnataka and Telangana are vying and have actually got a letter of confirmation or affirmation, not confirmation, from Foxconn to set up plants independently there. So please, come and you're welcome, but at the terms and conditions that are relevant to the Make in India story. And as it is making.
Rakesh, one quick question. You think the government would have been as adamant if Tesla was not manufacturing thus far in China, but maybe some other country like Taiwan or South Korea? Would the government still have been, so pokey into Tesla's entry into India?
Interesting question. So that China's entry into India via Tesla, number one. Number two, that India is a difficult market. So all that added up, it shows that arrogance and that sensitivity. I think he tripped on both.
All right. So I think tweeting didn't really work out for Elon Musk. It doesn't in most cases. He's tweeting less. I am given to understand now that he's back at Tesla, no more in charge of Twitter. But
I don't know if he's driving more now that he's back in Tesla.
Absolutely. but Elon Musk and Tesla's story continues to hog limelight, as we are now given to understand that this is eased way for Tesla coming into India. We don't know when that's going to happen, but at least the two parties now, Indian government officials and Tesla, sitting at a table and deciding the roadmap for Tesla's entry in India. Shifting focus to a story that is making headlines globally, and that is Nvidia becoming the first chip maker to join the $1 trillion club, and that is on the back of its AI thrust, the AI boom, and entering, a club that is so far been dominated by the likes of Microsoft, Alphabet, Google. I think important for the chip maker, but also sort of underpins the entire importance and value of AI. If you're
Absolutely.
riding on the AI wave,
Absolutely.
it is the future.
AI is the future, and I think this, it's an upward movement of just about 4.6% on the stock of Nvidia. So it was in the near about range of $1 trillion already, and I think it just got that spur yesterday when the stock went up about 4.6%, and it entered just about barely
And then
entered
closed
at,
just barely down.
at $1.02 trillion, right? So it is just sort of, managed its way to sneak into that very exclusive club of only 5 members, the other 5 members being Amazon, Alphabet, Apple, and Microsoft. Right, so this is the 5th entrant into that very, very exclusive snooty club of 1 trillion. But I think this movement and this entry goes a long way to exactly tell you how the whole world is deeply invested in artificial intelligence. And at a B2B level, at a B2C level, you will see a proliferation of AI, and AI needs enormous computing power, and that is what the computing chips manufactured by the likes of Nvidia and others bring to every motherboard in every system. So, and Nvidia is not a new company. I mean, Nvidia is a very seasoned old chip maker, and it's been known to make very high duty, high powered graphics cards and video cards, which power a lot of complex multi-layered processing. So in the circles, in the video editing circles, in the graphics industry, Nvidia had been a benchmark graphics card to have. And rightly so, it's transposition now into AI-driven algorithms, AI-driven tools, which goes on to just very, very categorically tell us that AI is the future, and anyone who is associated with AI from the software or the hardware side is likely to do well in this decade for sure.
Right, and Rakesh, Nvidia is now calling itself an AI company. They're saying that this is who we are, this is our identity. So far, they've made games, they've made GPUs, the processing units, the graphic processing units, but riding high on the tide of AI and working out well for them.
Yeah, Shweta, I mean, obviously it's a big headline that can't be ignored. But a couple of points. One, that it reaffirms and, confirms the superiority or the supreme superiority of the technology companies in the world. And we talk about big leaders, individuals, politicians, but these 5 or 6 technology companies have monopolized share of mind and share of market. So in that sense, this is a big trend of the last decade or so. This is the tech decade, as we call it globally, and it has, so to say, pushed away brick and mortar companies like the Exxon Mobils of the world. All top valued companies today are in the technology space, that too emerging and new technology. So that's heartening in that sense. And AI as the new technology, bringing about such massive interest, and with this particular company driving the big breakthrough through this super chip computer, whatever it's called, is welcome and heartening. Your Nvidia incidentally is one of the earlier companies that has established base in India. It has, I think, an office and a full-fledged setup in Bangalore. So again, if it is really pursuing big ticket interests and computing minds are available in India, the talent pool is available in India. So there can be a healthy marriage between the two. Sustaining this 1 trillion, and the AI fever. Also, if you look back, over decades, there is a certain frenzy about certain pieces in the business domain, even if they're new and new age. There is a tendency to sort of say to peter off. So, and also there is a context to it. I think a couple of days ago, the Nvidia founder, in one of the convocation addresses, I think in Hong Kong, did say that we have had our share of failures, and we are excited about this breakthrough. But the company almost got bankrupt, I think, just about a year and a half ago. Very interesting speech which has gone viral, and people are saying that it's the next best speech after Steve Jobs' speech. So one has to be a little circumspect as well. We're riding too much and reading too much into AI, but Karthik and I are on the two sides of the curve on this. I don't think human mind will sustain and continue to be the final arbiter of how to use AI and how to leverage AI. And also, we've been discussing about the AI's own pitfalls. If we really lionize it beyond a point and give it the weight it is, it has the capability to run AMEC as well on the ethical issue, on the humanity, on the humane element. So welcome changes in the technology space, big ideas, big breakthroughs, relevance for India. India could leverage that, and otherwise, excitement needs to be a little bit tapered off, because we have seen that these like the startup bubble we mentioned, there is a tendency to fly off the hand. And purely, if you compare the Alphabet and the Apple bouquet with Nvidia, in that sense, there is not a fair comparison as of now.
All right, not a fair comparison, but it has joined the club nonetheless, paired some gains at the end of the session, closed at $990 billion, but has finally hit a market cap. Nvidia, the traditionally game-making AI chip, is now making GPUs, which will be essential to AI technology, and rightful gains there to the tune of $1 trillion in market cap. That's an interesting story. We will, of course, keep tracking all of that and more right here on Newsline. Thanks very much for watching.